Good morning and welcome to the Smart Financial Planning review of the weekend papers on Monday, 17th of August. The government have announced this week that in addition to the punitive 40% tax that they currently levy on estates greater than £325,000 in the event of someone's death, they're now going to charge you interest if you're late in making those payments. Currently, the rate of interest charged is broadly the Bank of England base rate. That rate at the moment, as I'm sure you're aware, is 0.5%. In future, they're going to charge you 2.5% in addition to this, i.e. 3%. You would think that probably doesn't seem too unreasonable until you find out that if you were unfortunate enough to overpay your tax, you're not going to get 3% interest paid back to you. You're going to get 1% less than the Bank of England rate, but at a minimum of 0.5%. So currently, if you're late in paying, you'll be due to pay interest at 3%, and if you overpay, you will be credited interest at 0.5%. If interest rates move up to 1.5%, any late payments will be paid, interest will be paid at 4%, however, any overpayments will still only be compensated at 0.5%. Sounds to me like another tax that falls into this marvellous category of stealth tax, which for the most part is taxes that people neither talk about nor understand. The solution, as in many cases to these stealth taxes, however, is to seek to avoid them in the first place. You may or may not be aware that £325,000 is the maximum amount per person that can be left to anyone other than their spouse or civil partner. So a couple, in the event of the second death, may be able to use £650,000 worth of assets before there's any tax to be paid. And if one of the parties to that relationship were previously married and that spouse was deceased and didn't use any of their what we call nil rate band, there may be the possibility to use £325,000 three times. In addition to that, there are an enormous number of ways that we can seek to reduce any potential liability to this death tax. We can help clients give money away. We can place money into trusts. We can look at investing in assets that simply don't incur inheritance tax payable on them. There is a variety of things that you can do, and I would implore you to look at those options, because the last thing you want to be doing is having to pay interest on the tax, on the assets that you've already paid tax on throughout your working life. That's all for this week. Look forward to seeing you next week. Bye.